Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Chart Senior Market Strategist. The broader indexes have the perception of hammering out a bottom, yet lack of enthusiasm and powerful macro indicators are signaling more pain to come. As they say, there's always a bull market somewheres. The question is, can we find promise among the ashes of ruin? Now, the Mag 7's collapse have been the catalyst to our recent sell off, though one, believe it or not, is still up year to date and might offer a rewarding swing trade. All that plus your questions, and my co host to help me out is Mr. X. Hello, Thomas.
Hello, John. How are you?
I'm surviving. It was good. It was a good week. I thought the market was going to come off a little bit more today with OpX. I know that you tweeted out something about Max Payne that the market makers wouldn't let it, but there's always that chance that the apple cart gets flipped over. So I was glad that we didn't get the sell off, but I still feel that there is one yet more to come. So we'll look at that.
All right. So, John, we got a lot to talk about today, but just a quick reminder for those of you watching on our website, if you want to ask a question, just click Ask a Question at the top right. You'll see it in orange. And then if you're watching on YouTube, go ahead and ask those questions directly in the chat, and we will get to as many as possible. All right, John, so let's start today's show by talking about something that I think is on everybody's mind, which is which way is the market going to go? We need an answer, John. We want to know if it's going to go up or if it's going to go down. And I'm personally seeing, John, a lot of confusion in the market. Let's call it a lack of conviction. And the reason I say that, John, is on last week, the S&P 500 had been on a stretch, John, where it hadn't seen back-to-back green days in about 3 weeks. That changed. So on Friday of last week and Monday of this week, we saw back-to-back green days for the index. The problem is, John, it came on really low volume, about an average of 56 million shares, which is much less than the 10-day average. So I think that sort of highlights, John, sort of the lack of conviction, the lack of enthusiasm people have for the market. So, John, we're going to turn to you for your sage advice because you always have the answer for us. Which way are stocks going?
Hey, put up my chart there, Thomas, please. So, yeah, I think the lack of conviction is a great analysis or recognition on your part. But I don't think that's necessarily a bad thing, right? It really kind of means also that as we've seen a reduction in selling pressure, right? That the fear in the market might be over. So here's my candles here, and again, there's that volume that you've got. I use a 20 moving average volume, but it's still the same thing. We can see that the last week's worth of trading has been below the average. Now, remember the average was heightened over the last 2 weeks on this this sell-off. But my candles here, if you're not familiar with candlesticks, is that you have two types of candles. You have an open to close and a close to closed candles. And I always like open to close candles because what they do is they really show me the sentiment of that individual candle. And so what you can see here is, since making that bottom, and this is kind of your point, is we have 5 out of the last 6 days have been green candles. In other words, buying pressure. So that's a good sign for us. But I still believe that the market needs to make one more low. I think we need to test the most recent low. And remember what we said, what we wanted to see. We didn't want to see a quick recovery. We kind of want to see like a bull market. And, bull markets, bulls take the stairs. So we kind of want to see this climbing out. So, I want to see a little bit of a pullback here and then, a higher low and then a pullback out of it. So, let me go down to a little bit lower time frame here. Actually, you know what I'm going to do? Let's change our template here. I'm going to go to our 13 EMA and our pivots, which is a 30-minute time frame. And what I want you guys to kind of look at, and this is what I'm saying is, so here's that low, And then notice there's a little gap here today from that low. So what I would really like to see is the market to come back and make a new higher low. Let's say somewhere's in this gap here, or because we are in OPEX and there's a lot of weirdness goes on in OPEX days, but we do have two lows right here. So that would be a good sign for me for moving forward if we got above there. And then if we got above there with some strength and, like you said, some conviction with some volume. Now, let's look at this. So if you're not familiar with what I'm showing you here, let me go back and reset this. So these are what is called floor trader pivots or pivots, and they kind of give you levels of support and resistance. Now, notice that, that 553 level is a little bit lower than, is right in that gap. So that would definitely be a good low. And then, but the other thing that I do notice, and this is where I think we have to worry about, is that, we have these two highs here that come in line with today's first resistance. Now, the pivots changed on day to day, but it is also, you can see this yellow line here, is that 570 level, which we have already recognized multiple times now as a significant layer of resistance. Now, if we go into, let's say, our moving averages, and, this is kind of interesting, is we're getting the 20-day is crossing over the 200, and all of this price action is still below the 200-day moving average. And they're all kind of lining up together right around that 570 level. So to me, little sideways consolidation here. I really like to see the market kind of climb out from here again, making a higher low, and now we need to make that higher high. And so somewhere's above 570, and where this 20-day moving average is crossing the 200-day moving average.
Well, John, speaking of moving averages, crossing over each other, I noticed something that happened this week that probably not too bullish. Now, that happened in the Dow Jones Transportations average, John. It formed a death cross. Okay, so what does that mean? That means the 50-day crossed below the 200-day moving average. First time that happened since June. Now, people might think, oh, Dow Jones transports. I don't trade transport stocks, John. Who cares? Well, the problem is that according to Dow theory, when you have a trend in one index, like you did in the transports, another index will have to come and confirm that, John. So case in point, maybe that happens with the Dow Jones Industrials, and we go through a period of maybe prolonged negative trading action. What do you make of what's going on here in the transports, John?
Well, I definitely think that it's very significant that when we see the death cross happening, but sometimes we have to kind of take it with a grain of salt. Remember, the Dow indexes are price sensitive or price weighted, so that can make a little bit of a noise in terms of actual valuations. But here is the Dow Transportation. And that's what you're kind of pointing at. And notice that so far we're at, I drew this line early this morning, but we're down 20% from the all-time high. So what I would do is, anytime we have one of these mega moves, and this is what we said that we kind of want to look for. So let me just turn off our moving averages so it doesn't confuse us here. And I'm going to go to a higher time frame. Again, I'm going to go to that weekly time frame to get a big picture. So in this sense, it really kind of does look like the Dow transport is maybe not necessarily in a downtrend, but certainly in a sideways trend. So if you think about Dow theory, it never really confirmed when we were making new all-time highs. It was kind of trading sideways, and now it's going towards the lower end of the range. So you can see the two blue arrows. I think those represent areas of support. Now, if I turn our 200-day moving average back on, and I'm going to go back. Now, remember, this is a weekly chart, so this is 200 weekly moving average. But you can see that is kind of significant and a level of support. So if we go back to our daily, And so again, I think this is a very significant level of support that we need to worry about. But again, when I turn back the 50-day moving average, let me do that. What I notice and what I've seen and what I want to kind of point out is, what are we going to get out of this, right? What is going to happen? So are we going to get, this kind of quick V bottom like we did here, where the 50-day, bounces back really quickly like that? In other words, the bottom, it precedes where before the death cross, and that's kind of what we're seeing here. Or are we going to get something more like this, where we're getting that rollover and then we get that acceleration? That's yet to be seen. Now, I think what you're kind of pointing out is that, well, let's see if we can get that confirmation from the Dow Jones Industrials. And so if we go to Dow Jones Industrials, again, you can kind of see those same levels of support timing wise. And we're a lot farther away from them. And if we look at this in terms of our moving averages, the 50 is still way above the 200-day moving average. So we're not even near the death cross here. And we're kind of just hovering around the 20 days. So the Dow's Industrials is not confirming the downtrend of the transportation. So that's kind of how Dow theory works. It works both on the upside in bull markets, and it works on the downside for bear markets. But again, I think we can make an argument here that, we could be in the beginning of a bear market, and a bear market is a series of lower highs and lower lows. And so we have a double top here where we actually have a lower high, and we just recently broke what I would consider as kind of like a neckline of support. So we made a new lower low. So the question I think really will be is, if the Dow Industrials start to fall and our 50 rapidly reaches the 200, that would be the confirmation that we are in a bear market. But right now we're getting mixed signals. But again, let's think about old school Dow theory, which basically says, if transportations aren't healthy, if they're not doing well, that is kind of a signal to us that there's a slowing economy, right? There's less goods are being, transported around the country. And today, I don't know if you saw this, Thomas, was FedEx came out with their earnings. I think it was last night or this morning before the opening, and they were pretty terrible in terms of what they were anticipating. And certainly their guidance forward was saying that they don't see any relief until 2026. So, this company has already had the death cross, and there you can see it there. So, the tailwind to the downside is in place. Let's just see if we can see the industrials will fall through. Now, what I would look at this FedEx on a individual basis, you guys know how I enjoy looking at Bollinger Bands, and anytime I get a whole candle outside of a Bollinger Band, to me, that is a setup for a mean reversion. So maybe what we're seeing is kind of like this capitulation in transportations, but we still haven't seen that follow through in the industrials.
All right, John. So let's switch gears and talk about an area of the market that I think is frustrating a lot of bulls. Now, it's something we've talked about a lot. And what I'm referencing is small cap stocks, John. Now, a lot of prominent bulls, a lot of Wall Street faces, John, have come out. They've been very bullish on small caps. I know Tom Lee. I really like Tom Lee. He's a smart guy. But he predicted that IWM would rally 50%, John, over the last 12 months. And that's not even close to actually happening. So, the reason I'm bringing this up, John, is IWM, although it's been weak for a while, it's actually gone through its weakest period just recently. Through the end of last week, John, it declined for its 7th straight week, its longest losing streak in history, which is kind of hard to believe, John, but I think it speaks to the confusion going on right now in small caps. So here's the question, John. Should we just write off small caps forever, including IWM, or should we try and use all the great tools and pages that bar chart has to try and find those precious gems, John, that I know you can help us discover?
Yeah, so I'm going to call this segment, Thomas. Give me my screen, would you please? I'm going to call this segment the Phoenix from the Ashes. So see if we can find some phoenixes in the ashes of the IWM. But let's look again. Let's look at this from a big picture here, right? So we have fallen significantly from our all-time highs. But let's change our time frame here to about 2 years, still in the daily though. But notice that, we've fallen back into this level, which seems to be a very significant level in terms of the IWM or the Russell 2000, this 195, 200 level. You can see multiple times it acted as levels of resistance. And then when we finally broke above, it acted as a level of support. And here we are, we fell into that level and we kind of bounced out of it. So maybe, again, I'm not a big fan of buying stocks or equities that are below the 200-day moving averages, but maybe we can find something in this wreckage here that we've seen, based on the idea that, hey, the IWM has come to an area where we should anticipate some type of support. So I'm going to go to my stock screener page, and that's what I have here. And let me kind of fix this up because I was looking at this just before we came on. And I saved this one. It's called the IDM and bottom picking. And so let me kind of walk you through what I did with this one and see if you like my logic. So again, this is just an exercise that I do. I do these a lot where I kind of just like look into them, inside of markets or inside of the indexes, or look for some opportunities. So let's look at some of the filters I put in. First, I wanted to see if any of these stocks of the 2000 and the Russell had made a new high date within the last 2 weeks. In other words, what I want to see is I want to see them fighting the current conditions, right? That current headwind that we're seeing in all the indexes and in the broader market. I want to see them kind of fighting back. Now, I don't really need to see them to be making a new high today or last day. I just wanted to see that they made a high in the last month, or a monthly high in the last 2 weeks. Then again, I want to see them have above their 20-day moving average. Again, I don't care if the 20-day moving average is moving downward or is moving in a downward direction. All I want to see is that their stock price is above the 20-day moving average. Now, that is a bullish signal. And then under the MACD, the moving average convergence divergence. Now we have different ones. We have the 9, 14, 20. I think we have a 50 as well. So again, in the 9-day over the last 2 weeks, all I want to see is that the MACD is above zero. Now, what does that do for us? Well, you can have a market that is going down and the MACD might actually show positive momentum, but it'll be below what is called the zero line. So this is kind of a quasi bull indicator. So as long as the MACD is above the zero line, even if it's in downward negative momentum, that is still a bullish sign. And then, I want to start looking at those stocks who have held those most recent swings that we've recognized in a lot of the broader indexes. There was one that was in January, a swing low, and there's one that was back in December. So I want to see if I can find some of these stocks that have come near or have held above one of these two swing lows. And so I used a 5% of, let's see if I can find a stock that's 5% above its 3-month low. So that would take us back into December. So again, let's check our results. And, we get 200. Now that's a lot of stocks for us to kind of sift through. But I think it tells a bigger picture though, too. Right, Thomas? Right? You think about this. How many stocks are in the Russell? 2,000. So we're only seeing 10% of the stocks in the Russell that are showing bullish tendencies. That's a pretty bearish scenario, but one of our favorite stock pickers says, be bullish when everybody is bearish. And this might be one of those signs, those contrarian signs. But it's still a lot of stocks to pick from, right, Thomas?
Absolutely.
So what's always been the knock on the Russell?
Well, I think it's that a lot of them are zombie companies, John. They just don't make any money. So what the heck are they doing?
Yeah, exactly, right. So let's add one more layer to our filter. And so I've pre-done this here. We got cash flows. And I'm going to put a really low bar here, right? I just want to see this company has, in its last quarterly earnings, showed a positive net cash flow. And so last quarter, and I'm going to add it. And all I want to just see them, I just want to see them making money, right? I don't want a zombie, right? And if we sort by that, now we're down to like 100. So it's still a lot of stocks to look through, and I'm sure we can figure out some other metrics as to kind of narrow this list down. But I think from here we can kind of do some damage. So the first thing I'm going to do here is I'm going to go to my filter views, and under the filter views here, I'm going to rank it here by cash. See who is making money, and I'm looking at a couple of these. I kind of want to go into, ones that are making money that, have had a nice level off of the 30-day moving average. So let's go to our flip charts here. And the two that I saw was ALHC. Now, again, this is what I'm kind of talking about, right? Boy, that does not look like the current market conditions, does it? And there's that swing low that was in December, right? There's that swing low that was in January, right? So this stock is certainly fighting, that headwind. And the other one was, let me see, KTOS is up. Oh, there it is, right next to it. Again, right, had a bit of a correction, got a little bit of beat up on the sell-off, but a nice big recovery here as well. But again, a nice trending up market. So those are a couple potential candidates. Well, let's go back to what we talked about last week. We said we want to kind of look at companies that that are recessionary and maybe inflationary proof. And that would, we said we could look in, let's say, staples, healthcare, energies, commodities, utilities. So let's sort by industry. And, look at here, waste removal. That is certainly a recessionary industry. Rubber and steel, commodities. Look at a few energy companies, medical service. Russell has a lot of biotech and medical services, but here is one that's kind of, that blend between healthcare and a REIT, right? Nursing homes or outpatient care. So I think you could start looking for, some opportunities. So again, I did this process by looking at where they were on their 30-day and the 3-month and the 20-day moving average. And so let me do this. Let me sort by symbol because this is going to make it a lot easier for me. So this one, XERS, is a pharmaceutical company. And let's look at that chart. Again, wow. I mean, talk about fighting, blowing out expectations on the headwinds. Again, probably maybe a little overbought. I'm not one that's going to chase this one. The other one was, let me flip this around, was let's see, AKAB. There it is. All right. Right. They just recently had an earnings that kind of set the market up. It feels like it's got a little bit of backfill here. But again, notice, we're holding that January low. We're holding that December low. So, this is kind of the market I want to do. And then the other one that kind of interests me and which kind of fills a couple of different categories here is MWRX. USA. And this is a infrastructure company that's in the water management. In other words, they make the pipes that connects water all over. And you're hearing a lot of stories about not only in residential or commercial areas where, pipes need to be replaced, but that whole AI story about connecting water to the centers. They're using water to help cool some of these centers, and the fracking as well. So again, look at this stock, right? Very interesting stock in terms of the segment and also the chart. So I think there's a lot of gems inside of the ashes of the IWM. We need to dig around and find them.
And that's what bar chart's all about, right, John? Trying to find those gems in a pile of rubble.
It's really amazing. Not too many filters, and boy, we really got some great candidates, right? Certainly, you wouldn't have thought you would have seen charts like those in the IWM, depending on what we've seen in the broader market, right?
There's always a bull market somewhere. I think I heard somebody say that, John.
Yeah, I think so.
All right, so let's switch from small caps, John, to something that is certainly not a small cap. It's the exact opposite, and that's Meta. And the reason we're bringing Meta up, John, is I tweeted earlier in the week that it had entered a technical bear market. So what does that mean? That means it fell 20% from its recent high to its low. So Meta just barely fit into that category, John. So you see that and you think it's bearish, right? But then I see this, which is that Meta is currently the only Mag 7 stock trading above its 200-day moving average. And it looks like it kind of tested it and then bounced off of it, John. It's having another good day today, I think. So what do you make of this, John? I mean, 20% is not a great thing, but then you see this and it's outperforming all its peers. So what do we do with Meta?
Yeah, I think we can take some onus from this, right? Again, if looking at my charts here, again, this is kind of what you're saying. Out of all the Mag 7s, it's the only one that's up year to date. It's not up by much, but it's still up, right? So again, let's look at this from a different technical analysis perspective. So we haven't really done this in a while, but so below here we have is our MACD. This is our exponential one, 12, 26, and 9, and then here's the RSI. So you do see that the downward momentum is waning, although we haven't gotten across, but we are definitely in a bearish scenario. And you can see the RSI is, again, kind of waning and rounding out a little bit, rounding out bottom here. So, and actually it looks like we have a little bit of a crossover here. So that could mean that the conditions are right at the daily level for a little bit of a positive momentum. But if I go to, let's say, a weekly and we look at the same statistics, again, this is why we always want to look at multiple time frames, is you can see that, yeah, we have a crossover to the downside, but we're on the positive side of the zero line. That's, again, a signal that we're still in a bull market, just a bull market that has a lesser momentum. And the RSI, although still falling here, is still above 40. And we've talked about this multiple times, that RSI sometimes shifts in bull markets, and that in bull markets, when you get a correction, that you'll see the market will hold above the 40 mark. And you can see we're just below the 50. So that's a really good sign. And again, if we go back just to our chart and we look at our chart from that perspective of the 20-day moving average, like you said, and we are still staying above the 20-day moving average. So I think there is potential here for a little bit of a bounce, maybe a dead cat bounce, but certainly a bounce. And where could the market bounce to? Well, from where we're current, just below here, below 600, I think we could start talking about this, this confluence of an area, which we've recognized before. That's what the gold line is, where, if you remember, we did that show on the algorithms. This is where the algorithms sent the market on a run. But there you can see it. And it is right where the 100-day and where the 20-day is crossing over. So, again, It's not maybe an investment opportunity, but I certainly feel like this is one of those stocks that has probably been a little bit oversold and feels like it needs to relieve that momentum. But bigger picture, hey, this is just a correction. Yeah, a 20% correction from all-time highs. But if we go back to where the algorithms took over, that's about a 10% correction. And I think a lot of folks would say they'd be very happy to buy a very powerful stock on a 10% correction.
All right, John. Sounds fairly promising for meta bulls. I have a meta position, so fingers crossed that things pick up soon.
Yeah, I think from a swing perspective, I think you could play maybe a 1 or 2 week rally out of this one up to maybe like the 625, 630 level. I'd probably do it in options. I would probably do it on the outright.
Okay. All right, John. So our long-term listeners, John, of the show, they know full well that Nvidia, Tesla, and Bitcoin are not your absolute favorite investments, John. I think you've been bearish on at least one of them over a lengthy period of time. But John, as bearish as you may be, somebody has you beat. And that is Mr. Harry Dent. Now, for you Batman fans, this is actually Harvey Dent's brother, Harry Dent. He's actually predicted 20 of the last 2 market crashes, John. So the joke is this guy calls for a crash basically every week. Now, he says that today's hottest investments, including the ones I just mentioned, Nvidia, Tesla, Bitcoin, could plunge 99%, John, in an event we have never witnessed in human history. Now, John, as bearish as you may be on these 3 investments, are you as bearish as Mr. Harry Dent?
No way. I tell you what, if it does come true, I don't think you want to own stocks. I don't think you want to own anything. And maybe the only thing you probably want to own is a gun. But yeah, I mean, this is kind of amazing if somebody would do this. But, this is what these guys do, right? Their job is to get viewerships, and the way they get viewerships is by sensationalism. I think what we have to do is we just have to trust what the market is showing us, trust what the market is telling us. Yeah, could there be some kind of black swan event? Yeah, I think there could be, but I don't see, the Nvidias of the world or the Apples of the world going out of business unless somebody creates a new iPhone or a new chip. And I just think the barriers to entry to those ones are very, very difficult. So I don't see that happening. But it is interesting to see these headlines every once in a while, right?
Well, I've got my resting order for Bitcoin at $840, John. I'm not holding my breath too much, but let's see if Harry's correct.
All right.
So let's move from a bear to a bull, John, and that is Warren Buffett. Now, a lot of panic going on, John. The market has been in extreme fear since February 25th. That's actually the longest period of extreme fear since 2022. But guess who doesn't care? That's Warren Buffett, John. He doesn't care at all because his stock, Berkshire Hathaway, just hit a new all-time high yesterday. In fact, this week it's hit a couple different all-time highs. He's made some smart moves, John. He's gone to cash. He's dumped a lot of his Apple stock earlier in the year at higher prices. Seems like he's making some smart and savvy moves, John, which you would expect from somebody who's got the nickname the Oracle of Omaha. So what do you take away from this, John? This good old, I think it's fundamental analysis.
Yeah, I think, here's a guy who has a game plan, a trade plan, and he stuck to his plan. And, he also has his own indicator that I'm sure that was telling him the market valuations, the Buffett indicator. The market was way overvalued. So you got to tip your hat to the guy. I mean, here, look at my chart here. Here's the Berkshire Hathaway, the B shares. Yeah, I mean, wow. I mean, these are the kind of stocks you want to own, right? These are the kind of charts you want to own. So yeah, and then, plus the guy's sitting on $300 billion worth of cash, which I think I saw is like more money than like the G7 countries combined or something in their cash reserves, something crazy like that. So I think that's really impressive. But let's go to Warren Buffett's portfolio. And if you don't know where you can find that, go under our investing page. Here it is, Buffett stocks. And let's kind of do this because I see we're running a little bit over here. But let's look at this from year to date first. Let's do that. So this is an Chinese EV company, and Charlie Munger, years ago said it was a much better company than Tesla. Internet company, two Japanese company, telephone, Japanese, oil, right? There you go, oil, although he has another oil company not doing it. There's Coca-Cola, there you go. Staples company. So, I mean, the guy's crazy like a fox, right?
I tell you what, some people are ready to put him out to pasture, John, but not so fast. This guy still knows what he's doing, and you have to remember, John, he's also spent years training his successors, right? They've learned all the tips and tricks and strategies that Buffett has put into place. I'm sure he's dedicated a lot of his time to that. So they appear to be in good shape, John. Berkshire Hathaway.
Certainly does look like it. I mean, look at the year to date, or even the last 3 months. A lot of these companies. Now, there's some losers down here, but can't win them all.
Yeah, that one that caught my interest there, John, was Coca-Cola, which actually just formed a golden cross this week. I've said before, I love Coca-Cola products, John. I love Pepsi products, but yeah, it's doing well.
Let's see if I can. Where is that? Oh, there it is.
KO, a little to your left there, John.
Oh, there it is. Yeah. And let's look at from a higher time frame, because this one was kind of beat up for a while, right?
Yeah.
Yeah. Look at that. I'd be cautious about this double top, but yeah, I think certainly one of those staples that people rely on in recession and with inflation costs, right? You got to have your Diet Coke, right?
Absolutely. All right. So that wraps up a jam-packed show. I feel like we covered a lot of good material there for our listeners, John. Are you ready to continue on to some good old-fashioned Q&A?
Yeah, I feel like I see a lot of stuff going on in the background here. I feel like I'm going to be tested today.
All right. So let's start off. And I know you've been eager to sort of follow up on this one, John. So good thing we got a question on it. This is the Japanese ETF EWJV, which you recommended, I think, about maybe 3 shows ago. So the question is, John, do you have any further thoughts on EWJV? And do you have any other good offshore suggestions for?
I don't have any. I've been kind of sniffing around. I'm trying to find some, but yeah, so I'm maxed out on this one. I bought the dip, and which I kind of pointed out to you guys, and then I bought the breakout. So yeah, I'm at a max on this one in my portfolio, which is 5% of my total investment portfolio. So yeah, I mean, it's still working out for me. And again, I'm kind of riding the coattails of Buffett, right? I mean, he's got a few Japanese stocks here. So again, I'm going to show you, those of you who are following this trade, this was going to be my first target. And when we get here, I might sell some covered calls on maybe some of the position. But ultimately, I think this is where I was looking for by the end of the year. Now, again, we're not talking about a big move. I mean, this is a fund. It's a value fund. But, if we load it up, if you followed my advice on this one and you load it up in the mid 32s and you get up to 37, or ultimately, I think I had a number up here in the 40s, that would be a nice return in the next 6 months to 8 months. So that's I'm sticking with the game plan on this one.
John, what's a good way to find these different country ETFs on bar chart?
Well, you can go into the ETF section and under the Finder. So here's equities, and then you can do it by geography, and then you can look at, different regions. You can look at, for instance, globals ex-US here, or, Asia Pacific. And then you can pick, get granular and pick a particular country.
Yeah, that's a great way. And one thing, too, if you have a kind of a specific country in mind, let's say you want to look at a Germany ETF. If you just go to the search for symbol, John, and you just literally type in Germany ETF, you will get a list of some of the more popular ETFs that people can trade.
There you go. To skin a cat 2 different ways, right?
Exactly. John, any thoughts on Robinhood? I just looked at its chart recently. It's gone through a very rough patch, quite a dump.
Yeah, I think this one is kind of attached to what's going on in the crypto space, right? You'd have a little bit better feel on this one, Thomas. I'll put the chart up.
Yeah.
Um,
Yeah, there's definitely been a slowdown in crypto enthusiasm. So you would sort of expect that there could be a slowdown in enthusiasm for brokerages that kind of focus on the crypto space. So
I
I'm
did
not
see
surprised.
what the marketing plan was something about, they're trying to get folks to, move money in there. And they were giving some bonus packages to move your money in. But here's an interesting fact. If you look at, let's say, a brokerage firm, let's say like IB, Interactive Brokers, their average, I think they have assets under management is something like, I don't know, $300 billion, and their average customer has about $160,000 in their account. And then you look at Robinhood, which has like $50 billion under management, and the number of customers that they have, their average customer only has about $7,000 in their account. So these type of traders, and if you're one of these traders, I'm not trying to insult you here, but these type of traders, I tend to think that make a lot more mistakes, and also, kind of get chopped up, or they get burnt. And so that's kind of maybe what I think we're seeing here.
We got, I think Jim Van Meerten, bar chart contributor, he was having some trouble with his sign in. I'm not actually sure what he's referring to because I've not seen that feedback from anybody else. But Jim, if you're still having trouble signing into something on the website, just go ahead and send that to support@barchart.com. They'll be able to help you out with that.
Yeah, Jim.
Let's see. Any thoughts on nat gas, John? Do you expect it to continue going higher?
Yeah, I think we talked about this. We're getting towards what is called the shouldered months. And so weather won't have an effect on the market. I do believe that, there are some headwinds maybe recently. If we do get a ceasefire and we do see a relief of sanctions on Russian gas, and remember, I always told you that you need to watch the TTF, which is the LNG of Europe, to kind of give you some direction as well. So again, I think the last time we were on the show, we talked about natural gas. We said that it was kind of range bound between 450 and 380-ish, and I still hold that in line. You can kind of see where that is, but we are getting towards a type of year where weather does not have an bullish effect on it, and we're going to start concentrating more on inventory. So the numbers have been a little murky, and we're kind of maybe we might see inventories get back to normal, which could be a downward pressure. And again, if you look at, let's say, the TTF, which is the European energy contract equivalent of natural gas, and this is actually, it's here, the symbol on our page is TG, but you can see up here TTF, that has fallen in the recent weeks. And that has been a little bit because of this idea that maybe there might be a ceasefire in Europe.
John, for somebody with no experience and 100% cash position, what do you recommend they try to understand about portfolio allocation before they start trying to divvy up that cash into different investments? Do you have any tips or suggestions for that person?
Well, obviously diversification is key. And so not only diversification in the types of markets that you're going to trade, equities, financials, commodities, hard assets, real estate, right? The whole gambit. One of the rules that a lot of investment traders do is they never risk more than 1 to 2% of their risk capital on any one trade, and they never put more than maybe 5% of their so-called eggs in one basket. So that diversification. Now, in terms of an equities market, stocks, if you have a collection of stocks, somewhere between, there's kind of this sweet spot, somewhere between like 8 and 13. It was enough that not too many you can't manage, but enough where that if you have one of the stocks underperform, your portfolio won't take a large hit. It's called single stock risk. And obviously, as you add more stocks, you eliminate a lot more of that single stock risk, but then also it kind of mutes your portfolio. Now, what you don't want to do is you don't want to have 8 stocks all in the energy sector, right? That doesn't make sense. So you got to have diversification within those 13. And so I always try to keep my portfolio like in that, that 13 to 15 area. That if I start getting too many stocks in my portfolio, I really start looking to weed some of them out. So that would be the couple of tips that I would use.
John, where do you see Nvidia in 1 year? Do you see it lower where it's at currently, or higher? What are you thinking?
I mean, I think it really just depends on how the market takes the capital infusion that we're seeing in AI. Obviously, they have the number one product. They're in the lead. They're the best to breed. They're in the leader in their sector. But competition is catching up to them. Valuation seems to have come back to a relatively good valuation. I think it's down around 23 now, which on the low end for them, I think is historically a low end. I don't know. I mean, I would just let the cards tell you what it's going to do. I wouldn't be surprised if a year from now it's right here or in this range that somewhere between 150 and 100. I wouldn't be surprised. Look previously how long it's traded sideways. It's not uncommon for this stock to trade sideways for a long period of time. So I wouldn't be surprised if that happened.
John, we got a request if you could look at LNG with the trend seeker indicator and just kind of give your thoughts on where you think LNG is at. Actually, it was interesting, John, because I saw report out from Barron's today that Barron's came out cautious on LNG. So curious what you're seeing here.
Yeah, well, it's getting to be a crowded space here domestically. I think we have. Let's see. I gotta go down here. Trend seeker. So it is getting to be a bit of a crowded space, and again, if Russian gas becomes available, then that takes away from the LNG market. And China hasn't bought any LNG cargoes in, let's say, over 40 days, which is the longest in history for them. So certainly it seems like China is boycotting a U.S. product. So that could be a cautionary tale for it. And to me, it feels like it's in the range. Now, according to Trend Spotter or Trend Seeker, we have just gotten a buy signal today. Looks like it was actually yesterday. So, I think on this one, if you're going to buy this one, you got to wait for us to get above, let's say, this line here, which is 230-ish. And again, one of the rules that I use, I will look at a confirmational filter. And this one I always like to look at is the ATR. And so on a positive move, I like about 1.5 times our ATR. So we're talking about a $10 move. So I think there's patience that could be had on this one. So above 230, that would be 240 before I would really get bullish on this one.
John, do you ever look at things like drone stocks or drone related ETFs?
I do, full disclosure, I do have a drone stock in my portfolio. It's kind of a, it's kind of a punt for me. In other words, I don't have a lot invested into it. It's called Red Cat, and so no, I haven't really looked at it. I think there's definitely money to be had in that one. There's some interest in this one of recent. It's had a nice move. It's come back to a level where I feel like there's support to it. But again, probably on this one, I'm probably down a little bit on this one. So again, I don't have a lot in this one. I only have maybe 0.5% my portfolio, but it is one that I have been interested in watching.
It's interesting, John. I saw something from Goldman Sachs. They did a survey of different areas of the market that people like, and more than 40% said that they were long European defense stocks right now. And I've heard that a lot of late, John, but it also makes me think, okay, has this become an overly crowded trade?
Yeah, I don't know the symbol, and I don't know if we pull that up, but Rheinshammer, I think it is. That's the largest German defense contractor. Yeah, that stock has been just on a tear. So, but again, if we get this tariffs and then we're forced the NATO countries to start paying more, and Germany is increasing their budget for defense, those companies will benefit. It's just that I think the market, like you said, I think it's gotten ahead of itself on that one.
John, any thoughts on Palantir? We all know that that's one of your favorite.
Nah, let's do another question. We do Palantir all the time. You guys, how I just hate that company just because of the valuation on that one.
There's your answer, folks. John's not a fan.
No, I'm not a fan at all.
All right, follow-up question, John. This is on the 100% allocation. If that person feels that a market bottom has formed, would you suggest they rush in with their 100% cash, or just kind of take it slowly? And
yeah, what do you think?
I mean, it's just such a tough question. I mean, I don't know your age. I don't know your goals. It's just, the best thing is just to talk to a financial advisor and see kind of what they think.
Yeah, but let's put this out. Let's say, do you think it's good to go all in when you've never been in the market before? Would you go to a poker table on the first hand and go all in?
I probably would not. On the other hand, being in 100% cash is not great. I mean, Warren Buffett has said cash is, although he's built a nice cash position, he has come out and said cash is the worst thing that you can own. So try to, build a shopping list, try to find things you like, and try to identify price levels you want to start to get into, and then you'll feel more confident with your.
Yeah, there's a difference about being 100% allocated versus going all in at once, right?
All right, I think that's going to do it for today, John. We got everything.
Awesome. Great. Folks, appreciate you guys hanging out with us, spending time with us, and hope you guys get something out of Thomas. Again, a great show, a lot of great ideas. Until next time, best of health, manage your risk, and the good of all trading.